Hi, welcome back to my channel. We've got a lot to talk about today. As you can see, not a whole lot of movement on the day, but the big news is the stock market is continuing to struggle and coronavirus is getting worse. So the question is, how will this quarantine affect the stock market? But before we talk about that, and the article I have pulled up, I did go ahead and deposit another $100 into Robinhood last week. My total investment now is up to $3,900 with that additional $100. I bought 2 shares of SPHD at $28.65 each for a total cost of $57.29. I bought 4 more shares of Verit with an average cost of $4.53, bringing the total cost to $18.11. And I purchased $25 more of Bitcoin at a price of $66.74.55, which gave me a new quantity of 0.0864 Bitcoin. Verit, I will say specifically, is paying their dividend here on the 15th of April. All of my REITs are paying on April 15th. And the dividend payment for that now is going to be huge. I believe it'll actually be the largest dividend payment I've ever received. As I've talked about in the past, that is a constant dividend, and I'll talk about that a little bit more in the video. But here you can see on the week, I am down about 3% or $85. If we zoom out to the last month, we can see down 25%, which is very consistent with the rest of the market. I am down 22.5% over the past 3 months, down 22.6% over the last year, and 22.6% all time. Now, this article that I have pulled up is about a hedge fund manager's opinion of what is going to happen with the stock market. So here he says, coronavirus is unleashing an economic shockwave not felt since the 1930s. Mark Yusko warns. Hedge fund manager Mark Yusko is telling investors to brace for a nearly once-in-a-lifetime downturn. Morgan Creek Capital Management CEO and CIO sees the Great Depression as the closest comparison to what's happening to the coronavirus-raged economy. Economic shockwave that's coming is going to be like nothing that any of us has ever experienced because it's going to be very similar to the 1930s, he told CNBC's Trading Nation on Thursday. Here we go. They say that since this has all began, the index has tumbled 28%. The S&P 500 is down 26%. Yusko believes it's not too late to cut losses because the market shows no signs of recovering. This I disagree with from the perspective that I'm a very young investor. As I've mentioned before, I'm in college, 20 years old, so I'm not particularly concerned with what's happening in the next 5, 10, 15, 20 years. For me, it's about the long term, looking at the next 35 to 40 years, realistically. But Yusko says cash is king. We're in for a very drawn-out bear market. He estimates the fallout from the global economic shutdown to help battle the coronavirus pandemic will be counted in quarters and years, not weeks and months. Of course, different experts believe different things. But I would say that from my understanding, this is going to last longer than people typically expect. Excuse me. If you go back and look at something like the Spanish flu about 100 years ago, what happened is that they didn't take their time really reintegrating people back into society. And the following year, more people died. So, of course, this is a big stressor and a big topic right now. Yusko, who has $1.7 billion in assets under management, indicated to CNBC he's short a lot of stocks right now. He's particularly bearish on, bearish on retail and consumer stocks and over-leveraged companies. In addition to cash, he sees gold miners and emerging markets attractive from a valuation perspective. He also sees some opportunity with Bitcoin, which is among his holdings. Clearly, Bitcoin is a very large part of my portfolio. Doesn't really have to do with what's going on right now. I just think that in the long run, and particularly within the next year and a half, I think Bitcoin's a good investment. That being said, Yusko says it's an insurance against the collapse of the financial system. What I'm saying is that the stimulus response to the government is going to have a negative impact on currencies globally, particularly Western currencies. So what you want to have is something that appreciates in value. Bitcoin's going to do that. Again, I've talked about this many times. Bitcoin is a deflationary currency. The problem with the US dollar is that it's not tied to gold, silver, or anything that matters. Neither is Bitcoin, but Bitcoin is not centrally regulated, which makes it attractive. The Fed did go ahead and announce this week that they are basically going to do unlimited quantitative easing, which means that they can print as much money as they want to, whenever they want to. Of course, with the stimulus package, that helps. The problem is that when you continue to print money, money is less valuable. And of course, with Bitcoin being capped at 22 million coins in the next 130 years, there is much less risk of that. But before we get back to my portfolio, I want to pause and say, if you've not subscribed to the channel, feel free to do so. We're up to 55 subscribers, which is awesome. I appreciate the support. And let me know what you want to see me change. I've got some big changes planned for next week, seeing as that I should hit $4,000 But again, let me know what you want to see and we'll get to the portfolio. SPHD is my largest holding. And as I mentioned, I did buy another 2 shares of that last week. Up $5 on the day, still down $150 on that. Average cost is around $40. So as we can see, I'm down quite a bit. The big news here is the dividend that this is going to pay. So again, a monthly dividend here. But when we see this dividend paid, this was for March, paid on April 1st. Total amount is $204. That monthly dividend is really good. And the way that I see it, now is a good time to buy some of these, especially ETFs and REITs, because they're hurt so bad. Coca-Cola has not been hit nearly as hard as some other companies. So I'm continuing to buy it. Dividend King. High buy rating on Robinhood, down $65 on that all time. But again, high dividend. And as we can see, 76% buy rating, and the earnings have been consistently strong. Moving down, we have VTI, which of course is my total stock market index fund. Vivint Solar, I keep saying that I'm going to sell Vivint Solar. I keep saying that I'm done, that I'm going to buy Enphase Energy. I have people commenting that I should long Enphase Energy, that they believe in that company more. The more research I do, I think that's the right move. I just haven't made that move yet. So of course, I am stuck with this position, down $122 all time. Average cost is down to $679, which is good. But of course, I'm down a ton. The interesting thing here is when we go over the past 3 months, we can see large growth and a huge fall off. Over the past year, we can see that even more. And over the last 5 years, it becomes evident that this stock is all over the place. Let me know what you think about that one. AT&T, not hit nearly as hard as some of these other ones. Up to 6 shares on that. So we can see $28.80 on AT&T. Average cost $34.82, which is good to see. Especially because, again, high dividend stock here. What else was I going to say? Down $36 on this all time. Not horribly concerned about that because, of course, people are still going to have cell phones. So I don't see huge reason to be panicked. That being said, they are down 12% over the past 5 years, which isn't great, but 66% hold rating there. Microsoft, of course, I'll talk about because they're one of the companies that has not been hit particularly hard. As we can see, I'm still up on this. Average cost is $124. Over the past 3 months, we can see they are down 3%, but it's not the end of the world. Over the last year, still up 30%, and over the past 5 years, up 275%. We're going to start skipping around here. Logitech, I want to talk about it in the coming weeks because I think it's a good buying opportunity right now. Agilent had a very good day. Pfizer struggled, but I think there's reasons, particularly with vaccines, that they may perform well. Sony could be an interesting one depending on how the PlayStation 5 pans out. Or Realty Income. Of course, real estate's being hit hard because people can't pay their mortgages, restaurants are closing, any sort of retail spaces are struggling, but that monthly dividend is a reason to buy. Walmart has been relatively unaffected. Another interesting one. As I mentioned in my last video, Jim Cramer of MSNBC believes that if this is prolonged, there could be 3 retailers left in the United States, which would be Amazon, Walmart, and Costco. So I am down 38 cents on that all time, but of course, that is nothing to be concerned about when we look at the stock market and the way that it has performed. So the past 3 months, up 0.25%, still up 22% on the last year, and when we zoom out 5 years, we can see that it really has not been touched at all, which is good to see. But like I said, we're going to continue zooming down, and we can see varied, of course, is the big one to talk about here. Down to 415 because, again, it is a REIT, which means that it's going to struggle as all real estate is right now. I am down $91 on this all time, but I think in the long run, real estate's going to perform well. The problem is going to be getting over this hump in the next year to 2 years to even 5 years. Price continues to fall. Average cost is still there at $8.50, but as we can see, this dividend is currently at 0.1375%. Which means a total payment of $2.89. So if I can continue to buy this cheap, I think it will be a good hold for the long run. And of course, Penn. Let me know what you think. I'm considering making another video about Barstool Sports and the struggles that they've had specifically because of sports being canceled. We can see this has been my worst performer, down 75%. If we zoom out to the month, we can see it's atrocious. Over the past 3 months, even worse. Over the past year, down 55%. Over the past 5 years, down 40%. And again, this is mostly attributed to the fact that there are no sports right now. There are no casinos open, and there's really nothing that we can do about that. And last, we'll talk about Bitcoin, as I always do. Down $210 on Bitcoin right now. But as that article said that we just pulled up, there is reason to believe that Bitcoin is going to perform well both in the long run and, of course, by December of 2021. I mention it every single week. I'm sure some people are annoyed. Average cost here is down to 92.07, which is good to see. As I mentioned, the quantity is up to 0.0864. Portfolio diversity, it is just under 20% of my portfolio. Spent just under $800 on this. We'll zoom out to the last week. We can see it has outperformed the market. Over the past month, it is still down, but again, better than the market itself. Over the past 3 months, down 2.5%. Still up 40% in the last year, and I always like seeing this 5-year chart because it really is incredible, up 2,600%. I will continue to buy that and continue to buy that and continue to buy that. Like I said, my estimates are anywhere from 120,000 to 300,000 being the peak with Bitcoin. Certainly, I'm not an expert at that, but I'm going to continue to read and see what I can learn to try to hone in on that final price. But let me know what you think about this video. Let me know what you want to see next. Subscribe to the channel, and of course, I'll be back with another video soon. Thanks.